Wood trades. Looking at Bitcoin, I had a commenter ask something about the weekly on Bitcoin because of the high close within the candle's range. That is an indication of bullishness, more so not just the high close, but the recovery back above the lowest reaching bearish point. Indicated they really want to respect that level here, and that's why I have it. This is my testing. The testing devil, the devil of testing, is at this point here. So we already cleared and balanced this right here, so I can really take this and I'll keep it over here just in case next week wants to test this range as well. I'll keep this for the next couple weeks. I don't expect it to test this too many more weeks in a row after balancing and absorbing all those orders and getting some of the orders from here, which is even more powerful level after this sweep of this controlling candle. That's why I have this power symbol here, because this is the controlling level. As we can see, no close under, no close under, no close under as of yet. So this may be the first close under. I don't anticipate it, because once we get into the lower time frames here, we are respecting the algorithmic barriers very well so far in this buy zone that we had marked. We marked this buy zone on the 11th of November is when that buy zone got marked. Well, more accurately, the 12th, when this low created the top of this imbalance boundary. So that's just the easy buy zone. As we see, it did dip into the lower imbalance range as well to gather some of what was left here. We want to see that, because now we can be confident that we'll use this range from here to here again. This imbalance is controlling the low of this range to this high. So we can target all the orders that would be left behind here. Now have a clear target. If there are bulk orders left here, the clear target will be here in these highs. So this range from here to here is what we'll focus. We had some sorcery, some stop hunt sorcery right here, measuring this pullback to this extension. The bulk of the orders, stop orders, will be here. And as we see, no closes beyond that level. Again, recapping that this zone broken into half, then broken into quarters. We do see no closing underneath the top quarter of this buy zone. So we got some robot sorcery going on. This was our candle range high until this got broke. So now this new candle is going to be the candle range high. See how it dipped below this candle, cleared the QML. A lot of people still use that QML. This was a QML. It's expected. People who do study these things, it's just an expected. And this was a projection here, right? Boom, boom, right? We got some robot sorcery going on here, right? Exactly every time. And the QML level right here, boom, we come back above it. We wait till it comes back through this QML to absorb some of these IFVG orders, as the inner circle traders would call it. And we do have the point of control. So as we outlined previously, this point of control is going to be one of the easy to achieve. It's definitely going to be one of the easy to achieve levels. Where are we at? The 4 hour? That's all right. We're coming up on midnight now, so we'll keep that for the new midnight. So yeah, again, we do have a buy side liquidity target right here. This is a daily high, an old daily high. We do expect that to be taken. We do need a new measurement. We do need a new measurement block. We could possibly, if it closes above this, we could really measure. Let's just say we're done with the stop hunt for right now. we could really measure this to where are we at 5 minutes. Not bad. We could really measure. Let's get continuation targets here. We could really measure this to this. Maybe be conservative. Maybe even use the bodies there. It wouldn't matter. At a certain point, all the targets are above our target, our main target. 1.78 is our first stopping point if we use just the bulk order of the bodies. That's going to be somewhere in this. So we know for sure they're trying to get a measurement, a slingshot pull to get us up in this range here for sure. Is a for certain. Look at that. Some algorithmic sorcery going on with the middle of this gap again. Right? I'm gonna leave this measurement here. I'm gonna leave this measurement here because I believe in it now. We got a few targets. We got a low volume node here, which we know the system loves to fill these areas in as well as, right? It's strange, right? When you start looking at how everything, all of your confluences, we can even probably come up in here. Looks like, right? We are in a bearish volume wave, but let's look at some of the other rare stuff that I don't look at. Yep, CM pivots are up here. This is the pivot point. So our nearest resistance level algorithmically would be somewhere up there. Let's look at our volume. Of course, our volume is low, but this candle here does have me concerned. We do need to regain the volume control or the price level control over. We need to get a close over this candle again, attacking these highs. So hopefully these fair value gaps, let's go ahead. I think all this stuff is always distracting. Let's go ahead and put this right here because this is our base point of control right now. There is a small one here. The small ones are the best ones to trade out of. These little small itty bitty ones. The block that is the controlling block next to the gap. So this is the block right here. It dipped. So the top of this block is not going to allow price to close anywhere in that gap or at beyond that. When these small gaps happen like this and it does like a down, then a 2 times extension, then it'll pull back 70%. It's just right, like deviation, 70% pullback, and then all over again, deviation, 70% pullback, which will be the middle of this block because we already closed over it. And we have what? Another small gap. And you'll see these things. You'll see this happen if you just got to pay really close attention. You'll see these things happening and it'll repeat it again, right? Boom, deviation, pull back, using the wick of the bearish candle as the retracement zone, using the gap as the retracement zone. Seek this high right here, seek that high right there. That's just because we already closed over all these levels. So now this level and this level, right? Algorithmic sorcery right here at this level. We know we should have an easy nearby target. Just easy. We're building bullish blocks, so we seek bullish targets. That's just pretty much how it is. A lot of people, you can do all kind of weird stuff with the analysis, but at the base of it, it'll usually always be where's your close at, where's your nearest level that got closed over. And that's why I'll be dropping the ebook soon and the course. I mean, people just need to just simplify stuff, and I feel like I've been simplifying my game for years now, and it just comes down to those basic break and retest for me on the candle levels. That's just so good, so easy. All right, there's levels here, right? Level. So this is multi levels. You don't see it that way if you don't pay attention, but this got input into the system as a close, an open, a close, an open, and then there's a high in there somewhere. So all of these levels are grouped. So that's our next target right here. Boom. But because people take profit at highs and lows, this one will be a lot more of a, easier target. And then of course this right here, ultimately it'll be this, and then taking out all of this into this gap right here easily, very easily. And if we wanted to be, before we close this out, if we wanted to be more precise here, we do this to this and get something off of it, right? And so what do we get? Somewhere, of course, at this one, then we got another one where at this gap, then of course our final, what I would say our final deviation run, just leading into all the other confluences at that point. I believe this is a bit messy for me, so I'll take that off. But yeah, point of control here as well. So easy, analysis here so far. If we want to break it down even a little further, let's go ahead and we're going to be closing this bar somewhere up in here. So that's pretty much that. I'm not going to week high. That's crazy. This level is so old. But as we see, building a bullish block, boom, come down, right? We close over these levels, like we close over this level right here, and then these levels will be used, right? Boom, the deviation. We're going to close over this level. That level will be used or disrespected. There's not too much gap. There's a small gap right there, and that will count. That will count. This little small gap right here, that's the last one, so it's the most important one. That'll count. That'll count as a retracement zone. We want to correct that. The system just, the way price moves, it just wants to correct that real quick, or at least grab some of the orders that hang around this low for stops and all that, whatever stuff, all the pending orders. And then we want to do what? We want to also clear this as well. So our first target in this range will be right there. We'll just go ahead and put a target right there. That'll be our first target in this range. And it's just easy targets. And just keep trailing the price like that until you get, to your highs. There's a small imbalance still left here. But we do expect all of this to be taken. There's, this is just good chemistry right now for the bullish. If you start getting bullish closes, just go long. If you start getting bearish closes, go short. This will be our first bearish target, obviously, somewhere up in here or up in here, even here, because there's imbalances here. Levels that got closed over that never got revisited will be all targeted if we do start getting bearish closes. It's just simple like that. I bid you arrivederci on this one.